Aon's acquisition of Glenrand MIB coming with a price tag of 523 million rand. What exactly is this opening up in terms of opportunity for Aon? Is it simply a matter of getting scale that now allows you to compete more effectively?
I think you're absolutely correct. What we've seen in the 120 markets around the world that Aon operates, generally we've been number 1 and 2 in each one of them. In the 12 countries in Africa where we operate, we're in that position, and South Africa has always been the exception. So we're now at the point where we can have sufficient economies of scale to provide better products and services to consumers.
Of course, synergy is vital to the success of an alliance like this. So what synergies are you looking to leverage off here, and what's the plan in place to actually handle the integration process of the two countries?
Well, first of all, let me start with the difficult bit. The difficult bit for us at this moment in time is the integration in countries such as Swaziland, Mozambique, Zimbabwe, and Namibia due to the regulatory environment, and we had to wait for approval of the South African Competitions Commission before we could tackle those. That's the more difficult part. The local businesses we started to integrate. We're in the moment busy with a branding campaign to combine the brands, and we're integrating our offices, and we'll end up with 17 offices in South Africa. And I think the benefit, especially to the corporate client base, is access to the global markets or our global broking centres, whether they be based in London, Singapore or Bermuda.
Of course, the end game is to grow market share. What kind of growth target are you actually chasing?
Well, we certainly hope to achieve double digits growth going forward on the income side. The expenses is going to be a bit more challenging from the point of view that we've got restrictions placed upon us by the Competitions Commission, and we're in the process of appealing that ruling by the Competitions Commission.
In terms of market share?
In terms of market share, it's very difficult to determine because you've basically, the market is divided into 3 groups: the personal lines, your and my motor vehicle insurance, and then the commercial sector and the corporate sector. Now, when you look at the personal line sector, you obviously got the direct underwriters in there, so it's very difficult to determine exactly what is the size of that market share. But certainly on the corporate market share, we are the largest brokers on the African continent.
Let's look at the kind of market that you're actually tapping into here, because the opportunities present itself in the fact that if you're looking at the African scenario as a whole, it's the sheer underpenetration that one assumes that presents, the investment case at this stage. Is that the truth of it?
You're absolutely correct. If I look at what's been happening north of our borders, the area that we've been growing the fastest is in fact been what we refer to on the political risk insurance side. In other words, a financier is willing to finance a mine north of our borders, but is concerned that the assets might be expropriated or some extortion, or purely due to contract frustration they can't execute. So that's clearly one of the biggest markets that we've been growing in the last 5 years.
Of course, having said that, this is a market that boasts low penetration levels for a reason, and therein lies the challenge, because you're facing a market where the African consumer is not necessarily as aware as your more developed market like South Africa, for example. So just how much of a challenge do you see that posing?
We see the middle class in Africa developing at a phenomenal rate. If we look at the fastest 10 growing economies in the world, 6 of them are in Sub-Saharan Africa. So we're experiencing fantastic growth in places like Kenya, Tanzania and Uganda and the East African side, and then as well as in Zambia. And then of course there's definitely a turnaround in Zimbabwe as well. We're seeing some good results coming out of Zimbabwe.
How are you approaching that market specifically? Because there's a lot of tentativeness about with government policy seeming to be swinging, in different directions every week.
That's been an extreme challenge for us, is the Zimbabwean market. We are in constant discussions with the regulator, and of course then we've always got the indigenization bill that we're trying to deal with. But we've been in Zimbabwe now for 64 years. And we're at a point where we may have to dilute our shareholding to less than the 50%. And obviously that office will continue, but then it won't necessarily continue under the Aon brand.
Of course, that process is ongoing, and we'll be watching developments very keenly on that front. In the meantime, analysts saying that the brokerage sector is expected to continue consolidating moving forward, and that resulting in heightened competition. So your acquisition is set to be, one of many on the cards moving forward. How do you see this changing industry dynamic?
I think we must have a look at what happened around the world in the last 6 months and look at global capital. We started off with the earthquakes and the mining disasters in Chile. We then had the earthquakes in New Zealand. We then had the floods in Australia. We then had the Japan tsunami. And at the moment, we've got the hurricanes in the USA. So if we look at the last 6 months, there's some really big disasters around the world. What we anticipate as a consequence of that is that the spare insurance capacity globally might diminish over a period of time, which in fact may prevent the consolidation process, because obviously that will mean hardened insurance rates going forward. So the consolidation may not necessarily happen at the pace now than what we thought it might happen a year ago.
Are there any other alliances that you're anticipating or exploring at this stage?
No, not at all.